Hello everyone, this is Own Wall Street with thetradersperspective.com doing my midweek analysis. Before you, you have the US dollar looking at the weekly time frame. Just wanted to start off to kind of show you where we left off from the last video that I did where I had the Fibonacci levels and I was pointing out that the US dollar was slowly drifting towards this 94 level, and it seems that we are kind of seeing a little bit of a bounce, at least for right now. I'm going to go ahead and just remove this in a second here, but just wanted to kind of point out that we did hit this 94 level as I was kind of looking at. We might see a little bit of a bounce, as I mentioned in my last video. Um, if we don't really have a strong bounce and the selling just continues, then the next level, as I mentioned last week, or basically over the weekend, was that I'd be looking at this 93 level and then also keeping an eye on this 200 period simple moving average located near this 92 mark, and that's also going to coincide with the 50% retracement level as well. So the 50% retracement is underneath the 200 around 91.13. The 200 itself is around 92.30. So this is just going to be a a good area to see the US dollar kind of bounce a little bit. So let me just go ahead and get rid of this for right now, and then I'll go ahead and just drop down on the time frames like I normally do to kind of show you what to expect as far as the price action heading into the end of the week here. So for the US dollar on a daily time frame, you can see this is the previous weekly uptrend line here that we broke below. Here's our dominant selling pressure trend line, and here we have the more aggressive trend line, which has been repeatedly holding as the new area of the selling pressure. So that all being said, this is the daily time frame, and this is a live chart. So you do see that this is the next day's candlestick here. So we're looking at the activity for the 20th or overnight session heading into tomorrow, which will be Thursday here in the United States. So again, you can kind of see that we are kind of separated from this trend line a little bit. We did come across a level to watch as support, though I was looking for 94 even. I still expect that maybe we could see a little bit further of a drop. It's definitely not out of the realm of possibility. But for right now, we are definitely nearing the bottom, so that is always time to have take a pause for caution and kind of just evaluate what you're doing and what the security that you're trading is doing. Namely, if you're watching the US dollar video, you're probably just looking at this video just for gold, which is perfectly fine. I did have a poster comment on my gold video stating that the US dollar yen pair is the carry trade for gold. And as I mentioned to that poster, yes, that is correct. If you're looking for a guide on what gold is going to be doing, obviously you want to pay attention to what the US dollar is doing, and you also want to pay attention to what the dollar yen pair is doing. So dollar yen pair is actually looking weak. It's not. I'm not going to do a video on it, but I can give you a brief synopsis of what's happening there. Basically, we had a strong rally in the dollar yen pair over the past couple weeks or so, which was pushing gold lower, as you all recall, I'm sure, if you're up on what's happening in the markets. So right now we still have the dollar yen kind of trying to find its near-term bottom, so it does have a potential to kind of bounce soon. Um, in the meantime, just kind of keep an eye on things. But right now, I will just strongly suggest that go check out my gold video heading into the end of this week. That will be your clue as to what's actually happening with the dollar yen pair, given that the two are closely related at this point in time due to the carry trade. So again, hats off to the poster that did post that out there. That's not something that I had been mentioning in my videos, so I figured I'd just go ahead and, number one, give props to the trader that commented on my video. Thank you very much. And secondly, I won't be putting that out there. I do expect that some of you are more seasoned or avid traders and understand that there are correlations and such things as carry trades and so on and so forth. I try to keep my videos as simple as I can so that the majority of the viewers that are watching can pick up on what's happening, and anybody that doesn't understand what I'm saying or what position and trade I'm looking to take and why, that's kind of why I do my videos on a little bit more of a simplistic fashion, and I don't go into a little bit greater depths of what's happening and why. I'm just looking at the overall money flow. As a trader, I look at not what the news is doing, but I do watch currency pairs, so that is something that I do use. As far as anything else is concerned, I don't watch the news at all. I don't care what happens. I am aware of what's coming out, but I'm not paying attention to it. I'm watching what the money is doing. And by watching the money, I'm not watching the money flow indicator. I'm watching what's happening with the price action. What's the big money doing? So in this case, obviously the big money's been unloading the U.S. dollar for the past few weeks. So looking at the weekly chart, you could see that we retraced from the highs and we're down near this 38. We failed to hold below the 38.2% level, so now we kind of fell a little bit lower. So the 50% level is the level at around 42, I believe, just going back from recent memory. So long story short, hats off to the trader that commented. I appreciate the feedback. I welcome all comments. So if I'm not discussing carry trades or what's the main driver of gold or whatever it may be, that's just why I'm keeping it more simple for the vast majority of the YouTube viewership, and also so that everybody can kind of understand, or mostly people can understand, of what I'm talking about and what I'm using as my setups and indicators here, and so on and so forth. So enough with my ramble. Let's go ahead and see what the U.S. dollar might do. So honestly, it's probably best summed up right here within this little slither that I'm showing you here on the 4-hour time frame. You could see here that we had a very similar pattern developing here. This was obviously more aggressive of a drop, but here, so, same thing, was aggressive. We hit a level, and now we're kind of starting to try to trend a little bit higher. So as far as everything's concerned, right now we're bumping against my moving average here, which it does act as resistance when price is below it. So if the U.S. dollar is going to continue to try to bounce from this level, you're going to want to see probably these lows here along these 4-hour wicks hold. Beyond that, you just want to see pretty much something like this. Not to be exact, let me just go ahead and retract that. So we do have room for the US dollar to kind of pop a little bit. And by pop, I mean heading to this 50 period simple moving average is pretty much a possibility at this point in time. We have quite a bit of separation from this, so it might be time for the market to kind of cool off a little bit and get its bearings, and see a little bit of short covering, and then we might see if additional selling pressure comes in and drives us lower. So it'll be interesting to see what happens there. But if we do break above this 50 period simple moving average, or outside of this line here, if you will, then we still have the bigger selling pressure trend line. So going back to this daily time frame, this is the line that I'm referring to right here. So that's obviously the next big hurdle. So in the grand scheme of things, we still could, as I said in my last week's video, we could see a little bit of a bounce, this low 94 level, but I still see that we're not out of the clear yet, and I don't see a lot of conviction with this bottom being put in here. So I wouldn't be surprised to see a tap near the low 94s, like 94.08 or so. But that would be what I'd be looking for as far as a bottom signal. So I'd be watching the lower time frames like the hourly and such to confirm that. So let's look at the hourly time frame real quick just to kind of see what's happening. And I already have a buy signal generated here, and now we're kind of we're battling with this 50 period simple moving average. So again, you want to see this trend line hold if you're looking to go long. And I honestly think we're going to see a little bit of a reprieve from the selling pressure, and we might see a little bit of a bounce. The strength of the bounce is going to remain to be seen. As I said, again, I'm going to reiterate, I'm not too convinced on this candlestick being the bottom, and we have a little bit of a gap from this session's open already. So I wouldn't be surprised to see a tap near 94 as far as a candle wick kind of strike down, maybe take out some stop losses, and then see some short covering from there, and then maybe that'll be the candle that puts in the bottom, and then we'll see a little bit more of a bounce. But for right now, I would stress caution. Watch your positions if you are in dollar averse or inverse pairs compared to the dollar. So this is an area for caution. I'm not saying that you have to panic or whatever if you're short. the U.S. dollar. I'm just saying that overall, it's starting to approach that level where you want to have a little bit more, you know, control over what's happening. So if you're short and you're in profit, it wouldn't be a bad idea to put your stop loss in profit, as I always recommend. But maybe have it a little bit closer to these areas here that I was referring to, just in case something happens. You don't want to miss out on too much profit, and I know you don't want to get stopped out either. So up to viewers' discretion on what and where and how you place your trades, or where you put your stop losses. But that's what I'm seeing for the U.S. dollar. I wouldn't rule out, like I said, a little bit of a bounce heading into the end of the week, but in general, I'm still expecting in a longer term scheme for the U.S. dollar to continue down, at least to that 92 level, and then once we see that bounce off the 200 on this weekly time frame. Going back here is just so I can show you one more time. So this would be the level that would probably be a very strong bounce up from 92 to about this 94 level. So that's just looking forward into time. But for right now, just watch what's happening in the market. Watch how this week closes out, and then I'll update you all with my weekend edition. So then next week we can see what's happening and how the rest of this week finished off. So once again, I'm on Wall Street. This has been a presentation of thetradersperspective.com. I thank you all so much for watching. Subscribe to the channel. Again, I do these videos twice a week, usually once either Friday or sometime during the weekend, and then every single Wednesday evening I have these updated videos posted, and then you can go ahead and view them and then kind of compare them to what you're seeing, and kind of use them as the resource. But anyway, thank you all again so much for watching. I'll see you this weekend. Have a wonderful rest of the week.